Okay, so I got my T account set up here, and I'm going to go through my journal entries and update all these T accounts. So it's just a matter of going right down the line and hitting those that apply. Raw materials, 200,000 debit. Work in process inventory, debit, 128,000. And I suggest doing this with a ruler so you keep track of everything and you don't miss anything. Factory overhead, 19,500 debit. Raw materials inventory, credit, 147.5. 147,005. Factory overhead, 15,000 debit. Cash, nope. Work in process inventory, 102,000. It's going to be a little squished here, I think. Factory overhead, debit, 24,000. Work in process inventory, debit, 177. Factory overhead, credit, 177. Finished goods inventory, 355,100. Debit. Work in process, credit, 355,100. So you can see by the T accounts, folks, that we threw 200,000 in raw materials. We took 147.5 out and we put it into, part of it went into work in process, part of it went into factory overhead. And then we threw in labor, we threw in overhead, and then we took out those jobs that were completed and put them into finished goods inventory, because then the next journal entry that comes after that is up here. Cost of goods sold, 215,700. And finished goods, credit, 215,700. So like I say, it literally went from one bucket into the next bucket. So that went into cost of goods sold out of finished goods inventory. Then we have factory overhead, a debit of 149,500. And one last one, work in process of 27,000. And credit factory overhead, 27,000. And then we total up our T accounts for their ending balances. Okay, so raw materials inventory would have an ending balance of 52,500. Work in process inventory has an ending debit balance of 78,900. Finished goods inventory has an ending balance of 139,400. Factory overhead, you take a look at the debits and the credits and you see which one is the larger amount. As it turns out, the debit side is a larger amount, so I have an ending balance here of $4,000. That means that this side is actual, this side is applied. The actual came out higher than applied, so under or over applied simply means if we had higher expense than what was applied, we did not apply enough. Okay, right? So it was under applied. We did not apply enough overhead compared to actual results. And then cost of goods sold remains at 215,700. Okay? Alrighty. Next order of business. I need to prepare a report showing the total cost of each job that was in work in process inventory, as well as finished goods and cost of goods sold, and then I need to prove it by comparing them to my T accounts here, the ending balance of my T accounts. Okay, this is where the fun starts. And this is, by the way, why I put down here, we'll solve what's in work in process and finished goods, okay?